Good morning. So, an article in the Insurance Journal dated June 6, 2022, title reads Home Commercial Rate Hikes Not Enough to Offset Construction Costs. We are in a space right now when the rate increases that we have seen, and we've already seen rate increases go up 10, 15% in some areas, up to 30%. But with the rate increases that we've seen on property coverage, it's still not enough. To counteract rising construction material costs that have increased about 26.5% the first 4 months of 2022, personal and commercial property insurers will continue to gradually increase rates. What I can tell you that I've seen so far is that there is no gradual increase of rates. Carriers are filing for rate increases in the 20% range. If you're an insurance agent today and you're seeing these things come through, we know that we're going into a hard market. We know that things are going to get more difficult for us going forward. So, that being said, one of the things that we see a lot of right now, it becomes very, very challenging for a captive insurance agent. So back when I was a district manager at Farmers Insurance Group, we went through a period of time that was somewhat like what we're experiencing today. Construction costs had risen substantially. Rates were going up. Inflation was beginning to affect the market. When you're a captive agent, my farmers agents, they saw their book of business begin to dwindle. Policyholders began to leave. Policyholders that had been their clients for long periods of time couldn't afford to do business with them anymore. Now, we're on the front end of this right now. So, companies like State Farm, Farmers, and Allstate that are captive carriers that are out there, we're still on the front side of this, so we haven't seen the huge rate increases, but I promise you they're coming. If you'll begin to do a little research on where their loss ratio sits, and you'll do a little research on where their combined ratio, loss ratio is the pure cost of paying the claims that they have. Combined ratio is all of the expenses all in for that company. So whenever the combined ratio for a company gets north of, say, 90, 91, 92, it's hard for them to be profitable. Carriers will operate at a combined ratio of up to 100 because what they're doing is taking those premium dollars, they're investing them in the marketplace, and then counting on a return on the investment. Today, that's not possible because, well, the stock market tanked. So with not being able to get a return on the money that's invested in the stock market, coupled with the rising cost of construction and rebuilding when you do have a claim, whenever a hailstorm comes through, whenever a windstorm comes through, and it destroys that property, carriers have to take rate increases because they have to break even. So when that happens to a Farmer, State Farm, Allstate, you don't have any choices for your clients. Your clients will leave you. They'll begin to shop online. And that's something today that happens that didn't happen whenever I was a district manager at Farmers. Shopping online just wasn't a big deal. So they're going to begin to shop online and look for other options. They're going to seek out quite possibly, an independent insurance agent. Because an independent insurance agent has numerous choices. They can place you with the carrier that hasn't taken the rate increases yet. So get you a good rate for this year. Next year may not be so easy. It may be that they have to put them somewhere else. But for today, they can get a rate that's better than what was offered at State Farm, Farmers, and Allstate. When that begins to happen, agents that are at Farmers, agents that are State Farm, agents that are at Allstate, they begin to look for other options for themselves, for their agency. Because when you see a third of your clients leave because of rate increases, you're going to make a little bit more money off the rate increase, but not enough to offset the number of clients that left your agency, it begins to have a negative impact on your income. That negative impact on your income has to be absorbed somewhere. So you're either going to take less money home or you're going to lay off people that work in your office. If you don't have as many people to manage and take care of in your office, then it doesn't make sense to have the full staff that you had before. So this is going to have a ripple effect through our industry with the rate increases that are going up, the impact that inflation is having on our book of business. Agents that are thinking ahead, business owners that are thinking ahead, they're looking at how to become independent agents right now. And it can be challenging. It can be tough. In the independent world, some carriers are not taking new clients right now, or new agencies right now. They don't want to appoint new agents. So that's a challenge. Some carriers are beginning to get a little more strict, or a lot more strict, in the agencies they will appoint. They're asking a lot of really tough questions. If you come to someone like Agents Alliance, we can help you through that process. We know how to answer the questions. We know what they're looking for. We know how to help you navigate through that process and find your way into having access to enough carriers to build a quality book of business. So letting someone like Agents Alliance, letting a network aggregator guide you through that process is so worth it. So we do. Click on the link below. It'll show you my calendar. Pick a time that works for you. It'll schedule a Zoom call. We'll get together and have a conversation. Would love to talk to you. Hopefully the things I've had to say today kind of help you get a little bit better insight into the industry. Tune in. I'm going to try to do these every day. So tune in tomorrow. I'm going to talk about the auto insurance business, kind of what's going on there. And then throughout the week, we're going to kind of bounce back and forth between home and auto, discussing the impact that this rate's having on our economy today and some of the things that you might be able to do to offset the impact it would have on your book of business and on your agency. Thanks for listening.